friends, welcome back. I hope you are doing well in trading and in life. We are back, and today I have for you one trade and two entry models how to enter the trade. First will be with my strategy how I trade, and it will be on pure price action with combination with smart money concepts and liquidity. The second one will be the same concept, but we will just add footprints to it. So the first of all will be from my strategy, exactly how I trade, but this is just a practice session. So some of you will know that I trade only from these on London Open and New York. You can see exactly the times, and this is just like that we are going to practice. For example, when we backtest on the weekends, so we have to learn. So the first trade entry model, you can see that we have Australian dollar. We are on 15-minute time frame now. I prefer 5-minute time frame, but uh, but it doesn't really matter. So we are in a downtrend. How do we know it? Because we are completely bearish. We just go down from the top to the bottom, and we make very nice clean break of structures, and everything seems fine. So sorry. So we go down. And now, what will happen now? I will go to the 5-minute time frame, so you can see it. So after we break this line, we will search our supply or demand zone. In this we are in downtrend, so we will search for supply zones. So I will just play it. You can see that the price went through down, and now we are looking for a zone. So we will be looking in this circle, and what caused it? Firstly, it caused it we where or first where we have the big impulse. Is it here? Is it here? Is it here or here? You can clearly see that this is a sharp big impulse. So what created it was the first negative candle. So it was this. There we have our supply zone. Also, what can we say? What can we say? Why don't we have another supply zones? Okay, yes, we have, but like you don't have a really sharp impulse. Like, tell me what is this move? It's like nothing moves here, so you don't want to trade it. Okay, you can say that you have some impulse here, but it's two candles. No one is interested here. Here you have one, two, three, four, five big candles, and you have a big move. So you want to trade this. Okay, so we have our supply zone. Then I am looking for a trap. I go on the 3-minute or even on 1 minute, because you have some you are looking for some inducement, some trap. So the first sometimes the first obvious supply zone or demand zone can be the inducement. So there we have the inducement. It's a trap. Early sellers and buyers will enter, for example, here, have stop loss here, take profit. For example, here, what the price is going to do? It's going to, okay, it pushes you, but it moves you out, so your stop loss is hit. Okay, also we have an imbalance, clear imbalance, very nice imbalance. So the price will return and activate. So at the minimum it will go here. What we have also here, I will just delete this, and so that you can see it. Is this a liquidity? Yeah, big, kind of resistance Uh, Kind of resistance could be this, but it's not as perfect as we want. I thought, yes, I was trapped. Don't. It's never mind. Uh, and now we are good to go. Yeah, sorry. Here we can see the liquidity, the equal highs because there it was stopped. And yeah, yeah, yeah. Here you have the impulse. It went to the zone. First as a kind of impulse. Okay, some fake something. Maybe even a chalk. Yes, it went up. Also some kind of reaction. What is this? It's equal highs. So this is our liquidity. Another one. And it is even below the zone, which is very, very nice. We want to see this. What it will do next? Okay, it will go somewhere. We don't really care. We want the price that it will go. Okay, okay. So this is this is the other move. Okay, and we have still this liquidity. It was taken. Okay, and my entry is I really love to enter at 50%, and a lot of people will give their stop loss, for example, here above some supply zone or a wick or something like this. We target here. Why here? Firstly, there is a nice zone. You can see big push. So here is our demand zone. Okay. Also, there was made some nice break of structure. At least it will return here. So there we are going to target. We have some imbalance, so we target in this imbalance. You can see these this place. There are no wicks, so this is imbalance, and price want to get it. So, but it's not everything. We are not stopping because I like to enter at most stop losses. Where the most stop losses are, I want to enter. So also we have this wick. I don't like this wick, so I just draw this line and I push my entry. You can put it here, or for example here. I don't know if it will enter or not. We will see. And we are just waiting. So this is my entry model, and then like now we are just waiting. So yes, it goes. What we can spot, it's another liquidity. You can see some support. It goes to this line. So we are bearish. We want to go down. So it will take this liquidity and it will go down, and it will be much faster. So okay, now it fakes you. Okay, so we are good to go, and now we are at our entry, and we are good to go down. We will just wait. We entered 744, and we will arrive to the take profit, I hope very soon. Don't know. Okay, it's a bit longer. Yeah, and we hit our take profit right here at okay, something 2016. Okay, so it took some 2 to 3 hours. So quite okay trade. So this is the entry model from my strategy. What you can add if you want to trade with footprints, we are going to look on footprints. So just read in your footprints the candles and the volumes and the stacked imbalances and all these things combined. So I'm going to show it to you. I just, yes, drag it. Okay, so remember we have this kind of consolidation, which is also liquidity. I will just repeat it. Below your zone, when you have some kind of consolidation, equal highs, equal lows, it's good. It will go to your zone and it will probably take it. Not only this consolidation equal highs, but also this highs, these stop losses above the zone. So my recommendation is put your entries at the stop losses, and you will see what it will do. So footprints. We are going to footprints. Remember the time. So we have this consolidation. For example, this bar 736. Okay, 736. It's this. So this candle. Nice. This is the consolidation. You can see it, that it went. We have a nice line here. Okay, so our zone was was here at the end of this, and okay, at this wick. This So here is our zone is at the end, and what we are seeing now, there is this candle which is very very beautiful. You have stacked, yes, you have stacked imbalances. You have imbalances because a lot of selling pressure. We are bearish, we are in supply zone. We want to uh, take the liquidity so everything aligns, and we are just waiting for some kind of confirmation. So what you can also see is these blue numbers. These are also imbalances, but these are buyers, and these are trapped buyers, because they are buying, or yes, they can buy, or these are sell limits. I think it's sell limit. So it's this or that. But for example, imagine that you have some another kind of strategy, and you think that it will go higher, but you are trapped here. So they are stopped out. They don't want to go higher, and they decide to go with the trend. So yes, this is, for example, the scenario. I don't know. And so that's this scenario. So that you know it. Okay, what we have here. Okay, this was another candle. It went here, but I think buyers wanted to push it, because it went all the way up, all the way down, and closed at the half of its body. So it was pushed. Okay, what we can see here for uh, this means that no one wants to buy anymore. So they are exhausted, and they know it. So we are going to go down. We have another candles. Okay, nothing special. Uh, okay, but what I really like is this candle. Okay, you have one imbalance. Okay, it's better to have two free imbalances, so it's your confirmation, but okay, never mind, we have at least something. We have 49 lots, for example. Yes, it can be lots, it can be anything else. What helps you? But I tell to myself that it's, for example, lots. Okay, so 49 lots are trapped here. No one wants to buy. Okay. Also, this POC, it's is high, is very high in this sell candle. So this is very nice. Like when you have a rocket, you want to have the engines on the bottom, so that the rocket goes up. Uh, so so this is an inverse rocket, and it goes down, but just yes. So this. Okay, let's look at the delta. We have negative 17, that it was closed, so it went to max 14. Okay, they wanted to go here. Okay, we will buy, but you are trapped and imbalance, and we are short, and let's get in. Okay, also you can see 50, that it's also very very it's a big number. So we were positive, we wanted to buy, but no, trapped and it ended up negative. Okay, so that's very nice. So if you would like, you could enter at the close of this candle and stop loss above this wick, because we already uh, like the price already stopped out most of traders. So what you can do, what I would do, so it's this candle, so you can have some, it closes, you can have a sell stop, or you can enter manually stop loss. You can have it here or some briefing room, I don't know. It's how you want to trade, or how what type of trader you are. And if you have some fixed risk to reward ratio, I don't know, 3, you can target this liquidity, 3 or 2 or 5, everything you would hit. If you target this imbalance, you have nice 7.5 risk to reward ratio. In my strategy 10.36, but sometimes you have better entry, sometimes you have worse entry, or I have worse entry. It doesn't matter, like really, if your strategy, what is fine to you, what is okay to you, where you are comfortable, what you are comfortable with, so just trade it. I just wanted to show you two entry models and how you can trade, because I know you mostly love footprints. uh, so here you have one another entry model and strategy, how to enter or how to approach your profits. So I hope that it was clear to you. If not, write me in the comments and I will make another maybe a simpler, more simple, sorry, more simple video. And okay, so yes, that's it, and see you at the next trade and next setup. Thank you and bye bye.